Good morning, everyone, and welcome to NYSE Live. I'm Kristen Scholler here in the studio at the Stock Exchange. We do see equities fractionally higher this morning, led by technology names. Results from Taiwan Semiconductor restored demand in the artificial intelligence trade. That chip maker said it would lift capital spending by at least a quarter to as much as $56 billion this year. It also anticipates faster than expected sales growth. Well, shares of the NYSE-listed chipmaker are up more than 5% pre-market. Let's take a look at what's on tap this hour. Apollo Sports Capital says that there's a $2.5 trillion opportunity in the business of sports, and the firm's chief strategy officer will join me to explain how news media rights deals and the emergence of private equity are revolutionizing the industry. Plus, Visionary AI just launched a new AI solution that it says will bring unprecedented video quality to its users. Its CEO will share the details about the latest offering. Then at 9:30 a.m. Eastern, we will take you to Yorkville, America, set to ring the opening bell to celebrate the recent listing of 5 Truth Social ETFs on NYSE Arca. First, though, 2026 is underway, and that means projections are rolling in for the new year. I sat down with Chris Edmonds, president of Fixed Income and Data Services at NYSE parent company Intercontinental Exchange. He offered his insight to what he has seen and why he thinks we'll see plenty of resiliency this year. Let's take a look.
Well, certainly think all things fixed income. So that's execution, whether it's our bond platforms or clearing in our credit default swaps, everything in between and that vertical piece that exists there. Then I would say all things data. So we price 3.2 million securities every single day across the world. All of that information is incredibly important. And then our feeds business, our desktops, however those pieces of data are delivered into ecosystems of our clients is where I spend most of my time. The team's about 1,700 people operating around the world 24 hours a day, 7 days a week.
You're very active, and we see you producing content on a regular basis on social media as well. In fact, in 2025, writing at length about the resiliency of U.S. financial markets. Why are you confident that that resiliency will continue throughout 2026?
Look around the world. Where else do you want to be? It's very hard to have a portfolio, whether it's a small part or a large part, that's not important if it doesn't include U.S. assets along the way. The resiliency of our securities issued by the government and the faith in the United States government to pay those securities on time has never been broken. And that's incredibly important for people who want to run a balanced portfolio and want to provide an opportunity for a return long-term with their assets.
Chris, some economists claim that data center spending and compute power as it relates to AI kept the economy afloat in 2025. How do you see the AI story playing out in 2026?
Certainly at a macro level, it's a fair statement that it was a big focus. Everyone was chasing that opportunity at the end of the day. I believe in 2026, we're going to see a more granular implication. And what I mean by that is now we're moving to apps versus having a browser effect. Now we're going to move to an app that actually changes your life. The interesting thing for us is what drives those apps are unique and proprietary data sets. That's what we specialize in. So we've seen a lot of opportunity to take our data that works on the backside of these very large models at the end of the day to give the user experience each one of those developers are looking to deliver. So I'm very interested to see how we get more granular in order to get more personal. The more personal we are, the more revenue I believe the AI will generate and the more sustainable it becomes along the way.
Such a big story that we've been following.
It's a massive story. But the other part that we have is in our futures business, all of the power around the data centers, all of that's being hedged across our market leading platforms around the world. So we get two looks at that. We get not only the unique data that goes in there, but also the cost of operation on the AI side. And that's going to be mission critical as people actually have to come pay the bills for all that money that was spent along the way.
Let's talk about trends in 2026. What else is on your radar?
Certainly there are alternative data sets that are out there, things like Reddit and Polymarket. Really gives us the opportunity to go real time. Make a decision, not only make a decision real time, but make another decision of how do I hedge that position real time. That influence hasn't really been available until just the last little bit of time. So I look forward to seeing how that impacts our business, how those impact our trading models for all the clients that look to us for that, to provide that data in a very, very safe and delivered manner. more importantly, transparency. So those are transparency in real time examples. But if I look at the housing market as an example, insurance costs becoming a massive story in 2025 will become a bigger story in 2026 along the way. And we have products around there that are actually shedding light on what the actual cost of how to insure a home is in a given geography, given the risk factors. So you can make a much better informed decision, not only as a consumer, but as an underwriter of those insurance products along the way. So both those things, I'd label it transparency along the way, but it's either real time or at granular levels that had not yet or not previously been part of the equation.
Well, it's great to have you in New York. You're based in Atlanta. What brings you to Manhattan?
Well, every January, the Fixed Income and Data Services Group gets together to celebrate the success of the previous year and set the stage for the coming year. So this is our annual SKO, or Sales Kickoff, here at NYSE. We love to have it here at the epicenter of capitalism, which is what we refer to it all the time. And so we have people coming from all around the world, team members who celebrate what they've done this year and help us plan to make sure that we are providing our clients the exact value they need in 2026.
All right, thanks again to Chris Edmonds, ICE's president of Fixed Income and Data Services, for that interview. Well, stay with us, because up next, one firm says there's a $2.5 trillion opportunity across the business of sports, and we'll give you those details on the other side of this short break.
As we stand on the cusp of America's 250th anniversary, we're reminded of the principles that have powered the world's greatest economy.
The New York Stock Exchange is a cathedral of the capital markets, replete with rhythms and rituals that allocate resources towards socially valued uses. That story will reach a rare milestone when our republic marks its 250th year. Anniversaries of this magnitude demand more than just ceremony. They ask something of us. They invite us to reflect, to ensure that the future that we shape will prove to be worthy of the legacy that we've inherited.
Welcome back to NYSE Live. Apollo Sports Capital, a subsidiary of NYSE-listed Apollo Global Management, provides capital solutions across the global sports and live events ecosystem. The firm recently made headlines when it published a white paper saying there's a $2.5 trillion opportunity that exists in the business of sports. Well, joining me now with more is Sam Porter, Apollo Sports Capital's Chief Strategy Officer. Sam, welcome.
Thanks for having me.
Great to have you. $2.5 trillion.
Yes.
That's a massive opportunity. How have you seen the growth explode in recent years?
Well, if you look at sports as an asset class, you're seeing investment from high net worth individuals, institutional investors, and basically money in all shapes and sizes going into the space. And what we've seen in the space is it's scarcity in terms of franchises and leagues, and then durability in terms of the media rights and the way that the business of sports is able to access consumers from a variety of different angles: match day, media rights, and sponsorship.
Let's talk about media rights. The NFL is in the middle of a media rights deal worth more than $110 billion. What has led to the rising value in these sports media rights over the past few years?
Well, I think you can attribute that to the fact that live sports are something that you have to engage with and watch as they happen, right? Live sports. And everything else, for the most part, you can watch on Netflix or stream it or DVR it or however you want to consume it. And when it comes to live sports, you're watching them in the moment to see what happens. And that is something that really captures people on a day-to-day basis, leading to advertisers knowing that if you buy ad time during an NFL game, you are going to have a lot of people watching those games. And if you look at the top 100 broadcasts in the U.S. in any given year, 90 plus of those broadcasts are NFL games. So they're getting a premium for their content.
Yeah. So sticking with the NFL, we've seen the valuation of the franchises just absolutely soar. What's the biggest driver for this?
I think the biggest driver is the fact that the revenues of the teams are durable and long-term, and they're not going anywhere. These teams can last for hundreds of years, and they are scarce. So they're not making new NFL teams. They're not making new NBA teams. The teams that exist are the teams that exist, so there's scarcity with an upside balance sheet in terms of revenue generation and business growth.
Let's talk more about private equity, of course, in sports. For example, the New England Patriots. Recently, we see here the latest team to add investors in 2025. How is institutional capital changing the game of sports?
I think institutional capital changes the game because in the past you would have minority investors, limited partners who would come in, and typically they would be from high net worth individuals, families. Now institutional investors come in and maybe they have a longer horizon in terms of their investment. So the controlling owner, the majority owner, or general partner feels like, hey, now I've got a partner who brings capital to the table, can be here for the long haul, and can also provide me with other advantages in terms of what they can bring from partners and existing portfolio companies.
How resilient is sports as an investment?
I think it's one of the most resilient things because if you look at during the pandemic, things were shut down. You couldn't even have live sports. But one of the first things that people were clamoring for to come back, if you remember, the NBA played a season in a bubble, and people really engaged with that and went through it. And if something like that doesn't really stifle sports, then I think you just see how resilient sports is as an asset class because of what it means to people. People really connect with sports and bond over it, and it's truly part of the social fabric globally.
Yeah, I remember the bubble.
You remember the bubble.
Okay, so what types of financing opportunities do you see around sports?
So we're looking at basically every kind of opportunity there is, from direct equity investment into lending around stadiums, ancillary development around stadiums, and then like highly structured situations where perhaps somebody's owned a team for a long time, they have a much lower valuation, now the team's worth a lot more, and maybe they're looking for some liquidity. Sports is probably the least levered asset class there is, so we're always looking at what can make sense there. So if you look at the deals that we've done since we launched Apollo Sports Capital, we made an equity investment into Atletico Madrid, a very large club in Spain. We made a hybrid investment into Wrexham, which was some debt for them to build their stadium and surrounding area, and some equity because we want to take that journey with them. And then we've made an investment into Ari Emanuel's Mari Events Company, which is doing a ton of different stuff in terms of live events. So really, there's a lot of different flavors that we can provide into the asset class.
And Apollo Sports Capital was formed this past fall, so already some big action that you're taking there. How are you trying to take advantage of the trends that you're seeing in this space that was uncovered in your white paper?
I mean, a lot of what I just mentioned, I mean, taking advantage of the trends is having conversations with the important stakeholders. So the leagues directly, the media rights companies, the owners, and seeing what do they need from a capital solution standpoint. So we want to be flexible, we want to be long-term, and we want to be partners. So even when we're lending into the space, we want to be partners with the borrowers because we want to help them use the money to grow the business and continue the growth that we've seen. So it's really not a following trend as much as it is finding the right fit for capital at any given time.
What's your expectation for 2026?
I think we'll do a lot of deals. I think I haven't seen any cooling in the space, and I'm seeing more investment. I'm seeing more development. I see a lot of groups that want to to take their stadium and make it an entertainment zone globally. We're doing that with Atletico Madrid there, but I'm seeing it across, with groups that we're talking to across the U.S. and increasingly in Europe, which hadn't been previously doing developments like that.
All right, Sam Porter, Apollo Sports Capital Chief Strategy Officer, dropping the 2026 outlook for us here at the New York Stock Exchange.
Thanks so much.
Sam, thank
really
you.
Appreciate it.
Great
Take
to
care.
have you. All right, everyone, stay with us because up next, Visionary AI says it's the latest solution that it's delivering here in an unprecedented level of video quality. Its CEO is going to share more on the other side of this break.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. Last week, Visionary AI teamed up with multimedia IP company Chips and Media to launch what it says is the world's first AI-based full image signal processor, offering a way to supercharge video quality in real time. Visionary AI was among the firms generating buzz at the Consumer Electronics Show last week in Las Vegas, too. Joining me now with more is Visionary AI's CEO, Oren Debbi. Oren, great to have you on the show this morning. Joining us from Israel, you made this announcement at CES. Why is this new offering significant?
Thank you for having me. So at Visionary AI, we're making cameras work better. We're a startup based in Israel. My co-founder, Yoav Haib, and I started the company a few years ago with the vision to bring out the best in every camera. The idea for the software came when I was serving in the military. I saw that video quality is so poor in low light, and solving it is super mission critical. We're developing AI software which can basically turn cameras into professional DSLR cameras with incredible image and video quality. Our solution runs in real time at the edge. It improves quality. It improves brightness, sharpness, color, removes noise, and also improve detection. Today, we're surrounded by cameras. Think about how many cameras you have in your phone today. Almost all cameras are using detection, drone cameras, car cameras, security cameras, doorbells, even vacuum cleaners today have cameras. In perfect lighting, cameras work well, but the minute you have challenging lighting conditions, the detection fails. What we're doing is improving the video quality, which improves the detection. We can improve detection by over 75% in challenging conditions, which is a real game changer.
So for those who aren't familiar with what an ISP is, tell us a little bit more about what this means.
So what we released at CS was a full AI ISP, image signal processor. It's a tiny piece of hardware responsible for imaging on any camera. The ISP has always been a fixed piece of hardware, which hasn't changed much in years. It's the same fundamental technology. And what we did and what we're doing today is one of the biggest breakthroughs in image processing on the edge, because we're doing it with software and an AI network. We've been working together with a Korean partner. That's what we presented at CES, Chips and Media. We worked very hard with them on running our AI image processing on their powerful NPU, their AI accelerator. And we believe this is going to become the industry standard in the coming years. Instead of capturing noisy images and fixing it later, the camera will improve the images during the capture in real time on the device itself.
It's fascinating. So last week at CES, one of the key features of your demo was a video in extreme low light. What's the difference between your software and night vision goggles?
Great question. So first of all, we're a software which can be applied to virtually any camera. For example, when we've run the software on a smartphone, we basically turn the phone into a night vision device. It's pretty amazing. We can get it to really see in the dark in a way which surpasses human vision. In addition to being able to see in the dark, which is just one of our features, we can also improve HDR performance, resolution, as well as color accuracy, sharpness, and blur. I like to say it's steroids for cameras. We're able to squeeze the most out of the sensor possible.
What were some other notable takeaways that you had from the Consumer Electronics Show last week?
So it's just amazing to see how many applications. There's such a vast, wide of different ranges of applications our technology is relevant to, and to see people coming by. And like I say, a few key applications that we saw and what we're working with is one, security and defense. Security cameras often produce blurry, poor quality videos. We're very familiar with it from social media and what we see online. Different lighting conditions make it difficult to identify people and what's going on. Our software can improve the video quality and make it clearer to detect what's happening in the footage. The second market that we saw is automotive and drones. This is another big market for us. Think reverse cameras, 360 cameras in cabin. There's so many cameras in vehicles today. Our software is making cars safer on the road, more reliable, and consumer electronics like mobile laptop. In fact, at last CS, Lenovo launched a laptop camera powered by the Visionary AI technology.
All right, Oren Debbie, Visionary AI CEO, joining us from Tel Aviv, Israel. Oren, thank you so much for joining. We appreciate it.
Thank you very much for having me.
All right, everyone. Well, this past December, NYSE-listed Chipotle Mexican Grill was in the spotlight here at the Stock Exchange. The fast casual dining company rang the opening bell to celebrate the opening of its 4,000th store, this one in Manhattan, Kansas. Well, on this week's episode of the Inside the Ice House podcast, I sat down with Chipotle CEO Scott Boatwright, who opened up on the impact that the brand has on its employees and its larger mission. Let's take a look. I need Steve to talk louder. I can't hear what he's saying.
Restaurants and talk to one of our team members about their everyday life, and many of them will meet you with visible emotion in their eyes to tell you how Chipotle has changed their lives. And so, if you think about the past many years, as we've leaned into this idea of cultivating a better world, are really grounded in this North Star called Food with Integrity. We are changing people's lives in many unique ways and different ways as we continue to grow the great brand. But I'll tell you, it is when you navigate turbulent economies or downturns that are cycles that you try to manage through, you become stronger as a team.
Boatwright detailed the process of menu innovation and talked about how the brand changes limited time offerings to meet the needs of customers. Check it out.
We bring unique SKUs into our business that are on brand and that are on trend, I think is really important to meet a consumer need state. And once that gets through our stage gate process, it makes it onto a national calendar. We have historically done 2 LTOs in a given year. We are ramping innovation this year in 2026. We'll move to a 4 LTO cadence, so think of one about every quarter. And we'll also offer in throughout the year different sides and dips that'll create unique experiences for the consumer as well. If you think about the brands that are winning in the space today, they're winning on innovation, they're winning on value as a price point, which is not something we do at Chipotle. And then they're winning on experiences. And I think we can be very competitive in this environment with our core value offering, with our LTO strategy and innovation on menu, and how we think about our rewards consumers going forward.
Well, later in the conversation, Boatwright dove into the next chapter of Chipotle and where he'd like to take the brand in the years to come. Let's take a look.
The next chapter of Chipotle is how we think about, I was looking back historically and how many CEOs have been in the brand. I'm the 4th in the company, and thinking about what they all accomplished during their time at the helm, which was quite remarkable, from Steve to Monty to Brian. As I think about where I'd like to take the brand in the future is really moving towards this idea of being a global iconic brand that is creating food experiences around the world, unique experiences that are at an approachable price point. And so I think that's it, wrapped in a nutshell, is how do we continue to expand access for the consumer? How do we think about leveraging technology and AI to really drive better team member and consumer experiences, whether that's in our digital properties or in our in-restaurant experience? And then how we continue to grow and scale the brand globally.
Thanks again to Chipotle CEO Scott Boatwright for that interview. A reminder that you can tune in each week for new episodes of the Inside the Ice House podcast. You can watch and listen wherever you get your podcasts, and of course by scanning the QR code that you see on your screen. Well, don't go anywhere. We're taking a live look of the trading floor here at the NYSE, and we'll bring you live to that opening bell podium on the other side of this short break.
"16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it, because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto.
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream, and that's why it will be a successful company that delights the world with unbelievable products.
Welcome back, everyone, to NYSE Live. In just a moment here, Yorkville America is going to ring the opening bell to celebrate its recent listing of 5 True Social ETFs on NYSE Arca. These 5 funds focus on U.S. innovation, defense, energy, and real estate. Yorkville America CEO Tom Morello, who has more than 30 years of experience in the security space, is going to do the honors by ringing the opening bell. You're taking a live look at that opening bell podium as trading is about to get underway. All right, True Social Funds up there on the podium. 3 separate ETFs listed here at the NYSE. And we are officially off to the races in today's trade. Stocks gaining across the board, technology names leading the way, the AI trade back in demand this morning. And of course, all of this happening as earnings season really kicks off in full swing. Several NYSE-listed banking giants leading the headlines this week with their results. For more on all things earnings is Christine Short, head of research at Wall Street Horizon. Christine, welcome. Happy New Year.
Happy New Year. Thanks for having me.
Great to see you as always.
Good to see you.
What are your takeaways so far from these big bank results?
You know, I wouldn't say they've hit a home run exactly, but areas that we thought were going to be tailwinds we've seen investment banking, especially this morning from Morgan Stanley and Goldman Sachs, came in very well, which we were expecting, and it kind of is confirming what we knew. The thaw in M&A and IPOs of 2025 kind of makes that official. Coming into 2026, we believe deal making will continue to be a bright spot. And then some of the headwinds like net interest income turned out not as badly as we were expecting from some of these banks. Actually, it was quite good from Citigroup, Bank of America. Only Wells Fargo, I think, reported on the lower end and guided a little bit lower than expected. So far, I'd say pretty good start. We're not going to knock some of those results, but in light of everything, I think we're off to a pretty good start for earnings season.
How does this set up the results that are yet to come?
Yeah, these are the bellwether names. We hear a lot about guidance of the economy from some of these banking execs. Jamie Dimon is a great one to listen to. He's quite conservative, though, so he's always got kind of a cautionary tale, which I think is fine. But you just have to, listen to him knowing that. But so far, the banking execs seem very bullish on this year. They're, again, nodding to some of the headwinds. Of course, the credit card fees was very widely spoken about, as you would expect it to be, as well as Fed independence was another, area of focus. All of the banking execs believing Fed independence is critical to U.S. capital markets. So they did touch on those themes, which would sort of be a negative for banks. But overall, I think the picture, we saw wealth management from Morgan Stanley and Goldman Sachs being a bright spot. We're seeing investment banking, of course, equities trading, also a bright spot. So it kind of lines us up for a positive tone for the rest of the season.
What is your outlook in terms of earnings growth that we could see this reporting season?
Yeah, so far the blended growth rate is looking for S&P 500 EPS growth of about 8.5%. So that would be the 10th consecutive quarter of growth. Yes, it's not double digits, but as you and I know, as the season goes on, companies tend to beat already. We're not even 10% through results, and we've got about 85% of companies beating expectations. So that just continues to drive that number up. Typically, we start the season lower and we see it go up by about 3 percentage points. One interesting thing I will note about this season, and it happened last season as well, is that analysts actually ratcheted estimates up heading into the season, which is not typical. Usually they're very conservative heading into reports, but we actually saw a bump up of about 0.5%. So analysts actually believing that this is going to be a strong season, and you don't always see that. A lot of that was driven by an uptick in estimates for tech, as you talked about. AI trade is back today. We're looking for a broadening out of sectors. We've started to see that, but as far as the earnings season goes, expect tech to be at the helm. Our earnings growth expected of 25%, revenue growth of 18%. So again, kind of carrying the weight of the season.
Wow, that's impressive. So tech definitely in focus, and obviously the semiconductor space, I'm sure part of technology as well. Do we know how the semiconductors are expected to perform within tech overall.
Yeah, they're one of the leading subsectors, as well as the usual suspects. I think really the focus, and this started a little bit in Q3 earnings and will continue this season, are the cloud providers. You know, we're kind of moved on from the AI trading, the investing aspect of it, and now investors want to see, are those investments paying off? We saw names like Meta get dinged last quarter when they reported higher expenses as an AI, but investors just weren't quite sure if the ROI was there yet. But the cloud providers have been showing that payoff. So I'll be looking at Microsoft, Google, and Amazon again to see if those investments are continuing to drive overall growth.
Are there buzzwords that you expect will be showing up on some of these earnings calls and or in the releases?
Yeah, look, tariffs will still be there, but we've learned to sort of take those with a grain of salt, but expect them to follow up with how they've been managing those. And as we've seen, they've done so very well. The companies were quite resilient. Consumers were quite resilient to tariffs last year. Companies did everything from move around supply chains or production centers, pass costs down to consumers. And so certainly still looking out for that. It's also a midterm election year, so we'll be looking for what expectations are around that. We know to expect the administration probably to, I would say, keep things calm, although it's been not a quiet start to the year. But typically you see both parties try to keep markets and the economy calmer because you don't want to, have some large shock or roil markets ahead of an election. So we'll be looking for aspects of that. And then AI as well, the Fed, what's going to happen in May when Jerome Powell gives up his seat. So what are expectations about the next Fed appointee? And what about rates? We were expecting about 3 rate cuts this year at the beginning of the year. That's moved down to about 2 rate cuts. I think Morgan Stanley today said they're expecting a June and a September. So after Powell relinquishes his seat, we're excited to see, what they expect there because jobs numbers weren't as bad this last reading, and so you kind of started to see the expectations for Fed rate cuts fall as a result.
Any imminent reports that you especially have your eye on?
Yeah, look, it's all about after you get through the banks, which we've heard from, we kind of move into the tech season. So again, those cloud providers, Meta, interested to see what Tesla comes out with because they've certainly been in the news. So it moves on. There's segments, as you know, each sector has its day. And then once you get through a lot of energy companies, them being the laggard this season. So then we'll start to hear from energy. And then, of course, we always end with the retail earnings parade.
All right, Christine Short, head of research at Wall Street Horizon, joining us in studio to kick off this earnings season. Christine, thank you as always.
Thank you for having me.
All right, everyone, still to come, Abacus Global Management recently entered a new era as an NYSE-listed company, and its CEO will tell us what the firm has in store for the year. Plus, this year's Endeavor Week brought together some of the most high-impact entrepreneurs from around the world. The founder of Brazilian fintech firm Neon told us how it's standing out in the space. And NYSE-listed Amprius Technology was honored for its tech innovation at this year's CES event in Las Vegas. Firm CEO and CFO will join me on the trading floor a little bit later to share more on how this fuels momentum for 2026. Stay with us.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. In late December, Abacus Global Management started trading on the New York Stock Exchange under the ticker symbol ABX. The firm says it's on a mission to distinguish itself in the asset management space. And joining me now with more, Jay Jackson, Chairman and CEO of Abacus Global Management. Jay, welcome.
Thank you.
And welcome to the NYSE.
Oh my gosh, it's been a great journey getting here.
Yes.
Yes.
What made your company decide to list on the NYSE?
Sure. We were already a listed company. We listed about 3 years ago. We've had an incredible amount of success, 10 consecutive quarters of earnings beats. And for us, the natural transition is our company was really growing at triple-digit revenue numbers, top and bottom line. We thought, let's kind of move up to the big leagues and see what the next stage of our growth implied. And that was being a part of the New York Stock Exchange, being a part of their network brand and system, I think is going to be crucial to our next stage of growth of going from small cap to mid cap to large cap.
What are your biggest goals for 2026?
I think it's most importantly to continue to put out our messaging and brand, that people understand what it is that we do. I mean, what makes us a unique alternative asset manager is that we're actually the source of the underlying asset that we ultimately manage that's incredibly high demand by some of the largest asset managers in the world. So rather than just selling that asset to them, we're actually utilizing that asset, we're running that asset ourselves, and then selling those products out.
Give our viewers a better sense of your business. Walk us through the strategy and what you're aiming to accomplish.
I think from a strategy perspective, what we purchase are life insurance policies. We provide liquidity to people who had looked at their policy and didn't realize that it had value, and that's to the tune of hundreds of millions of dollars per year. Because of that value add, we have an uncorrelated yielding product. So in a market of volatility, our origination goes up, our manufacturing goes up, and we have an uncorrelated yield. And in these kinds of markets, whether it's you're in the bond market or the equity market, people are desperately seeking that kind of asset to go forward with, and that puts us in a great position.
Mm-hmm. How does Abacus work in longevity-based assets and data-driven wealth solutions?
So what we try to do is capture the entire life cycle of not just our client, but the underlying asset. Here's what I mean by that. We actually aggregate the lifespan, the underlying lifespan of the person's policy that we're acquiring. And that's super important because we now apply that data to several sources, pension funds, government agencies. Think about this. We have this wealth of data around healthcare, around medical, around lifespan, around mortality. And we can apply all of that to not just our investments, but we can also represent that as a service and sell that data back to major companies. And so with that aggregation of data, it's an incredibly undervalued piece to our business that is growing at several multiples.
Where do you see the biggest growth opportunities for your firm?
Sure. It's two areas. One, asset management, but two, I think private wealth management. If you have lifespan data, let me ask you a question. What's the number one fear of someone in retirement? Running out of money.
Right.
Right? What if they better understood how long they're going to be in retirement so that they could better manage those assets? Using our data, our lifespan data, and applying that to financial services is going to fundamentally change how people plan for their estate, plan for their loved ones, and ultimately transfer wealth to the next generation.
Mm-hmm. What trends are you seeing in institutional demand for the types of solutions that Abacus offers?
For sure, people are looking for things that are less correlated, that are more consistent, that can produce at a higher level. What we see in the markets today is different volatility and uncertainty. We all believe that 26 is going to ultimately be a very strong year, but where? and we produce an uncorrelated yielding asset that is incredibly high demand, that appreciates in value regardless of market conditions. So that's the biggest trend we're seeing. Our assets under management are up over 50% this year, and that's only going to continue because of that trend.
Does it feel different to be listed here on the NYSE now?
It feels absolutely different. It feels great. I would argue that we're sitting in a position now where globally our investors are really looking at our brand and saying, great, Abacus is now listed on the NYSE. Let's take a second look.
All right, Jay Jackson, Chairman and CEO of Abacus Global Management. Jay, thank you so much for joining.
Thanks for having me.
Great to have you. In some other news, Endeavor Week in New York City last year brought together entrepreneurs shaping the future around the world, and several of these leaders were recently here at the stock exchange, including Pedro Conrad, founder of Brazilian fintech firm Neon. He sat down with NYSE content creator Ashley Mastronardi to break down how his company is helping customers in a way that competitors can't. Take a look.
So Neon is a digital bank focused on average worker in Brazil. Our purpose is to provide them access to good financial products and help them to have a better financial life.
All right, how do you do that?
So we are a fully digital bank, licensed bank. So like any other bank, we have deposits, our own balance sheet. And the way we do this is by understanding their needs, offering them exactly the product that will help them at that moment. So credit cards, personal loans, investments, savings, everything that they need, but in an affordable way, in the right moment for their lives.
And what is Neon's mission?
I mean, I started this company 10 years ago, and I was very frustrated with the incumbent banks, the service they used to provide me as a client. And I wanted to offer something more inclusive, cheaper, easier to understand. I mean, average Brazilian financial education is very low, so it needs to be something straightforward, very simple for them to understand. So we help them with double click, they can do basically everything, and have access to products that they never had before.
All right, and what are Neon's biggest challenges in the area that you serve in Brazil? What challenges have you faced?
I mean, Brazil is a very competitive market, and at the same time, it's a huge market, so there's room for many players. I believe one of the most important components of the challenge we're facing today is how to. I mean, we're living in a country with 15% interest rates yearly, so the delinquency rates are quite high. So how to educate, how to help people to use their credit and their money better is number one priority for us. So for example, 30% of our users, they are saving money for the first time in their lives. And that's super important for like their financial life in the long run. So not only providing credit, but helping them to balance better how much money they save, which kind of product to use, and how you do this like through an app, 100% digital. That's number one challenge for us, I would say. Also, using AI can help us with that. We can be more effective in creating a very personalized experience for each of our customers, understanding them better, talking to them better. So I think it's somewhere around this.
All right. And what are the expectations, or what are your expectations for fintech in Brazil?
Bank institutions and fintechs, they are, I mean, they always had this important role in the economy. I mean, bank institutions, they are huge, super profitable. They support many other segments of the economy. And I think for the fintech is the same thing. We have one of the largest fintechs globally. It was founded in Brazil. I mean, we now have 30 million accounts open, so it's a relevant number even globally. I think fintechs, they came to make the market become more competitive. The market used to be split in five incumbent banks. Now we have dozens, hundreds of fintechs providing different service. So lowering the price, generating more inclusion for the population. So, but to be honest, it's still a lot to come. I mean, if you combine all the fintechs in the country, we're still not 15% or 20% of the country. So there's still a lot. We can all grow 10 times, and there's still room for us to grow. So, and the central bank is also fostering new regulations to help companies to grow and to flourish. And I think we're benefiting over this.
Why are you an Endeavor entrepreneur?
I'm so lucky to be an Endeavor entrepreneur. I think it's a group of people where I can really share what is happening, and everyone there is truly trying to help you. So it's a place where you feel comfortable in sharing everything that you need, knowing that people are there only to support you when you need. And I try to do this. Many people try to help me. I try to help other entrepreneurs. So it's a good place to be, with good, very smart people, brilliant talent, and in a place that you feel safe.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. We've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly, it is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live, everyone. We are down here on the trading floor of the New York Stock Exchange. CES 2026 brought together more than 148,000 attendees from around the world, including NYSE-listed Amprius Technologies. While the firm managed to stand out at this year's action-packed event, capturing a Best of Innovation award in the Sustainability and Energy Transition category. Joining me now with more, the CEO and CFO, Tom Stepien, with me here, and Ricardo Rodriguez on the far side there. Tom, first question to you. How meaningful is this award to your company?
The CES Award is very meaningful. It recognizes what the folks at Amprius have been doing to make batteries like this. It's the size of your cell phone, the battery in your cell phone, but it's twice as energetic. That means drones can fly further. That means they can carry a higher payload. That means that you can have an air taxi that takes off with greater power. We're honored to receive the award, and it's a testament of the hard work of our team.
Yeah, congratulations again, Ricardo. I want to hear from you. You're the CFO, as I mentioned earlier here. What do you think best shows the progress that Amprius has made recently?
Yeah, I mean, we're in the very early innings of an amazing revenue growth progression. You saw here us in Q3 report over $21 million of revenue. Gross margins also improved from 9% to 15%, and we believe that we have a lot more in the tank, literally. Our gross margins on our core business, which is SciCore, are of over 30% already. And as we phase out our SciMax business, you're going to see us continue on that path, improving our gross margins and obviously continue to grow the revenue base every quarter.
Tom, obviously drones are very popular right now. What makes Amprius stand out in that space?
The technology behind the battery that allows these drones to fly further. It's silicon. It was invented in Silicon Valley appropriately, and that gives drone manufacturers the ability to go twice as far, to have a higher payload. Drones are expanding dramatically. We see that in defense, the Drone Dominance program that the Pentagon announced. We see it in public safety. There are 1,800 police departments that have drones tied into their 911 system. Drones are becoming ubiquitous. Our batteries help them perform better.
And Ricardo, what is your strategy for growth in this area?
Frankly, fulfilling the demand, and then we actually operate with a fabless model using a network of contract manufacturers to increase production. And our team is constantly expanding that base. We are also expanding the SKU count for some custom applications. And yeah, our goal is to not leave any money on the table and fulfill all of the demand.
Tom, I want to hear from you as to the company's biggest differentiator when it comes to the battery space.
Lighter, longer, stronger. Our batteries are lighter. That allows drones and other vehicles to go further, electric motorcycles, etc. And it gives the extra power you might need for an air taxi, for example. Batteries are the differentiator for many of our customers' products. And again, it was because of the silicon. It's the biggest technical innovation since lithium-ion batteries were introduced 35 years ago. We're at the start of the silicon decade, and we're proud to be on the forefront of that.
Are there partnerships that you're particularly proud of?
Oh my gosh, yes. We have partnerships with our customers across the world, drone customers that rely on our batteries, electric vehicle customers, light electric vehicles, e-bikes, e-scooters. We see that expanding into robotics, into wearables. There are a number of customers. It takes a village. We're not doing this alone.
Ricardo, I want to hear from you on capital efficiency. What more can you share there?
Yeah, we actually announced on Monday earlier this week that we closed out our at-the-market offering program, which helped us raise around $97 million. That puts our cash balance at the end of the year at almost $92 million. And that, along with the model that I mentioned of being fabless and working with contract manufacturers, basically fully funds our strategy so that we can support this ramp over the next several quarters.
All right. Gentlemen, thank you so much for joining me down here on the floor of the New York Stock Exchange. Tom, anything more to share?
No, watch this space. It's very exciting. We're proud to be in it, and thank you.
Yes, thank you indeed. Tom Stepien, CEO of Amprius Technologies, listed here at the New York Stock Exchange. Ricardo Rodriguez, CFO of Amprius Technologies. Gentlemen, thanks again.
Thank you. Appreciate it.
Yep, great to have you. All right, everyone. We did this interview right at the Trading Post for Amprius Technologies. I know Jeff, our cameraman, got some good shots there, so hopefully you could see some of that action in store as we're live on the broadcast. A reminder to our viewers, you can catch us each weekday on all the streaming services that you see on your screen right there. I'm going to take a look at the big board from down here on the trading floor, and I do see the S&P 500 up more than 0.5%, the Dow higher by 0.3%. Just about a half hour into today's session. It's Thursday. Big banks rounding out their earnings this morning with NYSE listed Goldman Sachs and Morgan Stanley reporting. Up next, we'll have results from technology names in store. You heard from Christine Short, our resident earnings expert on the show earlier, and she does expect about 8% growth for the overall S&P 500 this year, about 10 consecutive quarters of growth. That's going to do it for today's show, everyone. Thank you for watching. As always, we'll see you back here tomorrow morning on NYSE Live.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?